Welcome back to the College Portfolio. It's your favorite hosts, Andrew and John. And while we usually talk about what we're learning in our corporate finance and investment classes like stock pitches, DCF models, fixed income, all that kind of stuff, today we're going to be discussing an asset that everyone owns or at least talks about, Bitcoin. But before we begin, I'll introduce myself. My name's Andrew Starr. I'm a finance student here. I'm a freshman. I'm involved in investing club. I'm kind of interested in more like the wealth management side of things. I entered at a firm last summer, but I consider myself relatively inexperienced. But that's why I wanted to start this podcast, so we could learn more.
Absolutely, and I'm John. I'm also a freshman studying international economics. Currently at Notre Dame, I'm part of investment club and past the private wealth management club. And, I do a lot of my own personal trading. I mainly trade on Robinhood right now. But yeah, I'm also definitely interested in getting more involved in the world of finance. So back to the topic at hand, but we haven't yet introduced cryptocurrencies currently in our classes. A friend of ours has been doing research into Bitcoin for the duration of the semester and has been gracious enough to join us on the show and make us better informed. So without further ado, our lovely friend, Banks Rayful.
Thanks.
All right, thank you for having me, guys. First off, definitely an honor. So, obviously, my name is Banks. I'm also a freshman in the same dorm as these two. I'm an applied math major, but I like to get involved a bit, learning about finance and getting in that realm. I'm also a part of investment club, so we're three little peas in a pod here. And I've taken a class this semester, and it was all about sustainability. And they let you pick a topic that whatever you wanted. And for mine, I started with Bitcoin, and I really just knew nothing about it to start off with, but it's really just been this unraveling and getting to learn all the inner workings and stuff like that. Everything that you would imagine you knew, but you kind of have just that surface level understanding, just unpacking all that.
Yeah.
It's been really a great experience.
Cool. Well, I guess to start off, for the most inexperienced among us, what exactly is Bitcoin?
It's a loaded question. It's a really loaded question. So obviously it's a cryptocurrency, but what really sets it apart, which sets most cryptocurrencies apart, is it's decentralized, which means there's no central bank or government that's supervising it and is directly involved with it. So it's entirely digital, no involved bank. That's my short, concise version.
All right. Down a little deeper here. What is a blockchain? Can you tell us a little bit about that?
So yeah, the word blockchain does get thrown around a lot. And essentially, what I forgot to mention is Bitcoin is kind of stored along this blockchain. It's essentially this collection of digital tokens. So you can imagine it literally a chain of blocks where each of these blocks represents a Bitcoin. So essentially to pass Bitcoin around, because as I mentioned, it's decentralized, you have to construct this blockchain where it'll allow transactions to occur much easier, much quicker, while also it'll kind of fluctuate the Bitcoin economy and make sure enough Bitcoins are in circulation at any given time.
Okay, that clears that up. I've been hearing a lot about Bitcoin farms. What does that mean? Cows, that kind of farm? Or, what we're dealing with here?
So yeah, Bitcoin farms are it's a bit of a misleading term. So Bitcoin farms are essentially they're literally, imagine a warehouse. They throw them in the middle of nowhere. They'll throw them out in northern rural Texas or out in Quebec or essentially where there's usually not a lot of people around, and they have these computers, and these computers, all they do is they just guess combinations. They're guessing numbers, and it's a computer that its sole job is to guess these combinations. It's all it's doing all day, every single day, is it's just guessing numbers. All it's doing. And essentially when it hits a right number that corresponds to the Bitcoin they're trying to find, it'll add to the blockchain, and as a reward, give them a Bitcoin. It's kind of cool.
It's kind of powers the whole operation, I guess.
Yeah.
Interesting.
So how is it mined? How is Bitcoin mined?
So yeah, like I said, it will essentially just keep running and testing these it's like a string of basically numbers and characters you'd find on a keyboard, and it'll just keep going until it hits the correct block or the correct combination of these sequences of letters. And yeah, as I stated, as a reward of essentially adding to this Bitcoin and contributing to the Bitcoin community, it'll receive a coin. Wait, I said add a coin? No, so it'll add to the blockchain. And then as a result of adding to the blockchain, it'll receive a coin for its work.
Okay. Interesting. So you talked about how it's like all decentralized and all that. Like, what are the benefits of Bitcoin?
So basically,
Why are people using it?
yeah, so there's sometimes there was a lot of speculation, especially like if you look back to 2020 when people didn't know like how inflated the US dollar was going to be. So relying on something where there's no central figure, where you're not relying on banks that might, like if you think about the Great Depression, why the Great Depression occurred, it was because banks were investing in the stock market. And the only way to fix that was regulation. But Bitcoin is entirely decentralized and there's no middleman. It's you and the Bitcoin. There's no person that's causing that transaction or that can pull away. So a lot of people, from what I have seen, are really comfortable in that. Like they like having that there's no intermediate person to where they can just like directly work with it.
Yeah, I see the appeal there. Definitely.
Absolutely.
Yeah.
Yeah, so going back to the idea of, mining Bitcoin and everything, can I mine Bitcoin? Like, how do I go about doing that?
Yeah. So I don't know why, like when I thought of Bitcoin, I was like, I feel like this can't be legal. I don't know. It's like kind of like sketchy almost.
Yeah.
But really, right now, you could go on Amazon, search up Bitcoin miner, and you could get yourself a Bitcoin miner. Like this, isn't this crazy? You
Yeah.
can go on Amazon and these Bitcoin miners that these huge firms that are generating like crazy amounts of profit, you can just buy one and get it shipped to your house, plug it into the wall. Well, probably not the wall. Probably won't do that. Probably costs a lot of money. Probably run up that electric bill. But and you can just start mining Bitcoin. You can just start doing it.
Really?
You can start mining Bitcoin in your bedroom. Do it in your closet. I don't know. Like obviously you don't have the kind of money that they might have to where you can like spend all this money and getting a ton of miners, but you can get like a little $50 miner right off Amazon. You can put it on your desk, start mining Bitcoin.
Is there any kind of like significant regulation on Bitcoin from the government? Like, what you're making it sound like so easy and simple. Like,
Yeah. So essentially, the biggest problem with Bitcoin is all the pollution and energy it uses, which we'll talk about a little bit about that later.
Yeah.
If y'all want to talk about that. But yeah, like that's the main worry of most governments with regard to Bitcoin. It's not its value because essentially like you can just think of it as another currency. But the way you obtain that currency is the main concern of the government. And
yeah. Um, Although like Bitcoin could cause like use that kind of resources like energy, I think one of the positives could be since it's digital, it's not like using like
exactly.
physical like paper or like metal physical currency does. So it's kind of like a double-edged sword.
Mm-hmm. So that was when Bitcoin first started, that's like kind of why that was a bit of the appeal is like you'll see everything about like maybe like the rainforest, something happening there. And it will kind of build up this fear of like the use of paper and stuff like that. And you would kind of imagine that Bitcoin wouldn't use anything. But while it is digital, everything digital has some kind of physical cost. Like you can't create something out of nothing.
Yeah.
So yeah.
So those environmental impacts are kind of a mixed bag when it comes to Bitcoin. Interesting.
Yeah.
All right. So how is the value managed?
Yeah. So no, like if you think about Bitcoin farms, like you'd imagine the bigger you make your farm, the more you could produce, right? Like you could really just make the biggest farm ever and then make the most Bitcoin. You can just make the most money ever and you can just like continue to scale it and just keep creating Bitcoin. But, and if you guys want to read about this, bitcoin.org is actually a site that is ran and managed by the Bitcoin team. And it'll kind of like detail all this. Obviously, you probably want to do your own resource. Like hearing directly from Bitcoin might not be the best source, but the founder, right when it released, so in 2008, so you'd imagine he didn't really have the scale right now. Yeah, I think it was around 2008. It might have been written a bit later than then. He wrote a book on this. It's called A Peer-to-Peer Electronic Cash System. And I'll link this down below. And it's pretty short. It's about 9 pages. And it was actually written by the founder. So it's pretty concise. It kind of gets to the point in most cases. It doesn't use a lot of jargon, but it really will tell you everything you need to know. But in it, it details this proof of work system. And like getting back to your question, I'm sorry if I went on a tangent there. And this proof of work system essentially will manage the value of Bitcoin And it's kind of like this underlying feature that kind of stabilizes the value and protects it from inflation and deflation, and making sure these farms can't just mine 1,000,000 Bitcoin the more they scale.
Yeah.
Then like one thing I forgot to mention, it's a lot of people don't know, is that there's actually only 5 people that are managing Bitcoin on the back end. Did you guys know that?
I
did
know.
not.
5 people.
5 people,
Which is a fear. You got to think about that.
It's
Cuz
a lot
like
of power.
it's a lot of power, cuz like Bitcoin's market cap, you guys can check that thing. It's probably in like the trillions.
Hmm.
But like you're that is a fear of like, if you were to ask someone like, why are you using it? And they're like, oh, no intermediaries, but there are 5 people backing it.
Yeah, it doesn't sound quite so
Yeah.
decentralized now.
Yeah. So while there is a team of developers, which primarily do code, there's only 5 people that are actually regulating it, called the Core 5. The Wall Street Journal did an article on this. If you guys want to read it, I'll also link that below. It's called The 5 People Keeping Bitcoin Alive. It's a great article. Yeah.
Interesting. I'll have to check that out.
So diving back into the idea of energy and, kind of the environmental impacts of Bitcoin, how much energy are, these farms actually using, per farm, and on a bigger scale, how much energy total is Bitcoin producing or using, I mean?
Yeah. So obviously, like I mentioned to you guys could just buy a miner. So it's a pretty wide scale. Like, because there's people that kind of just buy one miner, set up in their house, and let it go. But then there's also the entire opposite end of the spectrum, where there's like these huge farms that are creating this like giant sort of like using something like 100,000 miners, and they'll keep pumping it out. To nail down how much they're making, like, or how much energy they're consuming per farm is a bit hard. But if you guys go to Digiconomist, I think that's how you pronounce it, Digiconomist, they will actually tell you guys the total amount of like world energy use of Bitcoin. It's kind of an interesting scale. It'll also tell you the carbon emissions. And it's really insane. It's around like 150 to 200 terawatt hours, and a terawatt is a trillion.
Trillion.
So a trillion watts. Just as I did a little bit of research to this on the end of towards the beginning of the semester of my class, or towards the middle actually. And Bitcoin, if you were to label it as a country, say, its terawatt hours would range in like the top 20 of countries.
Mm-hmm.
So if you were to like just throw the terawatt hour comparison, it would like rank above Egypt, Argentina, Argentina, and it would have like the same energy consumption as entire countries.
That is
Wow.
crazy to think about.
Puts it on a different scale, yeah.
Terawatt.
So do they just run these machines for longer then?
Well, essentially, like, to create more Bitcoin, like the proof of work system, what it will do is, because like 150 to 200 terawatt hours is an insane amount. So while you can just run it for longer, the proof of work system, which I mentioned earlier, it kind of sets that back, kind of manages it. So what it will do is, and it really just loops back to how it's managed, is it will essentially set the difficulty of kind of finding this blockchain for these farms. So the combinations they're guessing might be longer characters, it might be more complex characters, and it might be harder to guess. Well, it's like not they're actually like manually guessing, but these like random guess they're throwing in, they'll just make it harder. So by running these machines for longer, like you were asking, it won't actually do that much better. But that is what most of these firms will like decide to do. And they will actually just like keep using more energy, keep producing more carbon emissions. And that's their way around it. It's just like brute force straight all the way through. But basically, it's kind of necessary if you think about it, because the proof of work system, without it, these big firms would just be able to make as much Bitcoin as they want. And then the value of the Bitcoin would just be kaput. Like there'd be so many Bitcoin in the market that like it would have no value. So they have to regulate. It's like this kind of double-edged sword where Bitcoin, obviously, because it doesn't benefit from heavy regulation, but it can't make the proof of work system too difficult to where it's too hard to maintain a Bitcoin, because then people would just be running for longer, like you said, and making bigger farms and then using more energy. and producing more carbon emissions. But at the same time, they can't lower the proof of work system to make it easier to obtain a Bitcoin, because then it'll be inflated and then it'll have no value. So they have to kind of manage that. And I'm pretty sure, to my knowledge, that's what those kind of 5 people do. If you guys are interested in it, Stanford did a really good academic article on this. It's a, what's it called, living paper. So they're still actively editing it. Yeah. But if I'll also drop that below or send that over to you guys so you can put it below, because the proof of work system, it truly is interesting.
Yeah, that'd be a interesting read right there. I had kind of another question kind of on that topic of regulation. Like, since it's so decentralized, Bitcoin is, and it's not directly tied to one country, is there a significant concern about it being used for kind of black market, dark web transactions?
That's a big part of it.
Shady stuff can't be traced
yeah,
it can. I'm not
exactly.
sure
So that's one of the biggest concerns, especially for these governments. So I would say first environmental, and second is safety.
Yeah.
Because there's no decentralization, like you were saying. You can just go person to person, transfer the Bitcoin, and it's entirely encrypted.
Mm-hmm.
No one can track that money. So yeah, like a lot of sex traffickers and drug traffickers will rely on Bitcoin to kind of, I don't know what the proper term is, I don't know, exchange. But yeah, that's probably one of the worst aspects about Bitcoin, which is crazy because that was the appeal of it. People were scared of regulation of their currency, and they went the complete opposite. And now it's too far. It gets a little dangerous.
Definitely, that kind of freedom and anonymity is definitely a double-edged sword.
Yeah, so you mentioned that there are 5 people in the background kind of controlling Bitcoin. How many of these miners do they actually use, though?
So the users themselves don't actually use any of the miners. They're probably a bit involved, I would imagine. They probably are mining a bit of their own Bitcoin, but obviously these 5 people probably are living quite lavishly, I would imagine. But some of the biggest miners, well, quantity wise, are about there's the biggest Bitcoin farm, which is, I'm pretty sure it's out in Texas. It's fairly new. It's by Riot platforms. There's about 126,000 miners, which is crazy. And you can really just go on their website. Greenpeace did an article on this, which I also learned in the class. It's quite crazy because imagine this. 126,000 miners, and these miners probably about 1,500. Let me get my calculator out. That's coming out to almost $200 million.
200 million?
200 million. 200 million with the big M.
Wow.
So you got to think about this. That's the upfront cost, aside from buying the land. And then you also have to pay the energy, what's it called, cool it.
Yeah.
And they're incredibly reliant on this. There's obviously a lot of faith in that they'll make a profit, but they're putting this much money into it. And the exact same miner they're using, you yourself can go on Amazon and buy. The exact same one they're using, and that they put $200 million of faith into. You can get one too.
So yeah, you mentioned we can get our own, but they must have some sort of lifespan on them. So, how long after you have to get a new one, is it like a new iPhone?
Yeah, so that's a bit of the problem there, is that you kind of got to think of it as an arms race, because how the proof of work system works is the better people get, the better your neighbors get, the harder Bitcoin on the back end has to make it to kind of obtain the Bitcoin. Mm-hmm. So if you're lagging behind, you're not producing as much, you don't have the newest technology, the less profitable you're going to be. You kind of have to stay up to date with things, run for longer, and have the newest tech.
So you're saying there's a lot of innovation in the mining space. There's always trying to make it more efficient, or
mm-hmm.
Yeah.
That's a very, very big part of it. But the worst part of it is that, but you beg the question, what are you doing with all these miners? You just bought 126,000 miners. The farm across the state from you just buys these newer miners, and they're better and they're faster.
Yeah.
And they're generating way more profit than you. And that's, well, obviously on a smaller scale, but imagine the whole world is doing this and you were a little bit behind. Now you have 126,000 miners, you don't know what to do. Riot Platforms is sitting there and they're lost. So there's a significant, in the Bitcoin space, a ton of e-waste, which is like one of the scariest factors of this. I read an article called also by Greenpeace, and it's all about this e-waste problem. Like they did a lot of research into this, and I'll also put that below. It comes out to like 30.7 metric kilotons. So a kiloton is like 30,000 tons. Like
Wait,
that's
what? Just for like a definitional clarification, what would you can you clarify what you would categorize e-waste as?
so e-waste is essentially like kind of, I would say, like the broken parts, or not like broken, but these like essentially the computer itself. The computer, it's the e-waste.
Okay.
Because kind of just throw the computer out back. There's not much salvaging of it you can do. And a lot of these firms won't salvage it. They might scrap a few parts from it, but obviously they can't use all of it. They might take like a GPU off of it, maybe some of the cooling systems that work within it, but there's going to be parts of it that are outdated, that you have to get rid of. And that's where a lot of that e-waste is coming from.
Okay, so e-waste is a concern. What about noise pollution? Is that a significant concern?
Yeah, so they're loud because they got all these fans on them, and like these fans are just like obnoxious because
Well,
126,000 miners, each of them's got to cool down.
yeah, it gets
Like probably gets hot in there. Those fans are running like crazy.
I bet.
And I don't know if you guys have y'all ever been into like a warehouse, like heard the big like industrial fans or stuff like that? You know what I'm talking about?
Absolutely, yeah.
Yeah, like these things are loud, and what these farms will attempt to do, is put their farms far, far away from people. They don't want to cause any problems and kind of just throw them out in the middle of nowhere. But because obviously, if you're generating this much noise in the middle of a town, like a pretty decently sized town,
Yeah.
everyone's gonna get all mad. So they kind of throw them out into the middle of like some rural states and stuff like that. And so they try to mitigate it, is what I'm trying to say. But obviously, they can't mitigate all of it. There's a lot of sound being produced, and people are going to get mad, obviously. They don't want this big farm coming into their neighborhood. What's it called? Producing all this noise. It's loud, it's obnoxious, stuff like that. And honestly, if you go in the Wall Street Journal, I'm pretty sure NBC did an article on it, ABC. There was this kind of case. There's several cases actually of these towns in Arkansas, in Quebec, and Texas, where people that live, say, within a mile of these farms are just constantly hearing this sound. And still going back to this proof of work system, they have to be running these things 24/7. So regardless of what this family's trying to do, they're going to be hearing this fan, these like all this, and the computers will make like a little staticky noise, and it's kind of like the farm obviously cares about its profit. So they're not going to like stop running it at nighttime, because nighttime, what, 8 hours? 8 hours, that's a third of your day. That's when you're making a lot of profit. So they have to keep running them. But then they like, say the 10 or so families that live within the range where they can still hear it are going like deathly blind, and they're causing all this noise pollution. So it's like really crazy to think about.
So it sounds like it is something that it needs to be considered when you're constructing these facilities. Okay, that's good to know. To kind of like get into the nitty gritty of it,
Yeah.
where is all this energy that's powering these things coming from?
Yeah. So for the most part, a lot of it's fossil fuels.
Mm.
A lot of it's fossil fuels. It's relatively right now, for short end of it, can generate the most power. Obviously, I would imagine a lot of these farms are, with a lot of the regulation, are trying to lean more towards using green energy.
Mm-hmm.
But currently right now, they are using a lot of fossil fuels. It's almost entirely reliant on fossil fuels, which, again, that Digiconomist site I mentioned, you can go on there and you can actually check how much the carbon emissions, and it's a little disgusting to look at, because it's entirely all for profit and what they're doing. But at the end of the day, for them, they find it necessary that they have to do this, and they have to use these fossil fuels in order to run their farms. Which is a little gross.
Is there a significant like government push to transition this to renewable energy?
Yeah. So think about this. These farms are releasing all these carbon emissions. Carbon emissions, like the climate change problem, don't care about state boundaries.
Mm-hmm.
So, and they don't care about country boundaries. So say you put a farm in southern New Mexico, right on the border, and you start make it a huge farm, start churning out, using fossil fuels, pumping out like all the CO, carbon monoxide, and then it goes over, kind of pulls over to Mexico. Now it's Mexico's problem. Now Mexico's sitting over here and saying, you're producing all these carbon emissions. USA, this is your problem. The United States, this is your problem. You guys have to deal about this, because Mexico, obviously, if they could do anything about it, they would. But it's over on the other side of the border, so they really can't do anything about it. So they'll put pressure on these U.S. senators and U.S. representatives to kind of push for some regulation on this, because these carbon emissions, they don't care about country borders. They won't care. They like the net distribution of the issues that the carbon emissions are causing is pushed on everyone.
Yeah.
Yeah.
Yeah. It's kind of I guess you could classify this as a pickle that these miners are in, because there's kind of a competition. You were saying, like, they like have the incentive to like produce a lot, and say like some in like one country might be limited by their country's regulations to only use renewable energy, whereas some other country might not care, and they're just using fossil fuels, and they're more productive.
Yeah.
So that's it's a difficult balance, you know?
Yeah, it's a difficult balance. Very difficult balance.
So yeah, so we a lot of emissions here, so yeah, how much does it cost to manage all of this? How much does it cost?
So yeah, obviously we have some finance and econ majors here. You guys all care about the cost of all this. And like I said, it's about 200 million to kind of, what's it called, for the upfront cost. That's excluding the land, it's excluding the warehouse. Then at the same time, you have to pay for the workers. There's 100, like we said, there's about like 100,000 miners in there. You got to manage all of them. You got to make sure they're all working, up and running. So for our economist here, you'd be happy to know that it does actually add a good amount of jobs to the area. So it does a good job of like these rural towns when they move in. It does a good job of like contributing to that like little rural town's economy. But at the same time, like the cost of it is like still immensely high. Even if you're pulling in these kind of, I would imagine these rural workers are probably working for fairly low incomes. You're probably looking at around like, I don't know, $500 million.
Half a billion?
$500 million.
Half of the B?
It's with a $500 million with a B. Jeez. Yeah, it's really crazy to think about. It goes to show like these firms are really confident and that they can spend $500 million a year and still be profitable. Like they can, well, probably won't be $500 million a year, but if you're considering the fixed costs and the variable costs, like we learned about in micro,
Yeah.
that for your first year, when you buy those miners, you'll probably look at around half, get these things up and running.
Yeah. That's a sizable cost. And these facilities got to get hot.
Yeah, it's real.
How are they cooling them?
Yeah, so, gosh, like that's a whole can of worms right there, because they have the fans, but like obviously these fans like can't do everything. Running these things all day, they get hot, get real hot. So you gotta, I don't know if y'all have heard of water cooling. Yeah, they have them in a lot of computers. Like you can get like a water cooling feature within them. Basically, when you're pumping all this water through and you're using the water to cool it, the problem is like, what you gonna do with all this water?
Yeah.
You just like polluted all this water, using it to cool, running it through your system. You don't know what's in there. And then obviously you can kind of filter the water and stuff like that, but you're using a lot of water, around like probably like 600 like gigaliters.
And also, these are in rural areas, and farms have a lot of use for water.
Exactly.
So there's also that aspect of like, how's that being allocated?
Definitely, like in these, like you think like Texas, you're not thinking lakes. I mean, I imagine they probably set themselves up strategically, but Cell Reports Sustainability, which is a journal you can go read, actually did an article on this, on how it's kind of affecting these, and kind of where I got that number of 600 gigaliters a year. And if you want to go read that, that's an amazing article. It'll tell you guys a little bit more about this. But yeah, water, it's a crazy problem.
Yeah, sounds like it. But
So yeah, I know we bounced around a lot today. I kind of thinking about all we talked about. What should we do instead?
So yeah, like I kind of hammered in that Bitcoin is kind of like this negative thing, but obviously, finance and econ majors, you guys are probably going to run into Bitcoin every once in a while, and it's going to be unavoidable. You might have to use it. It's probably the most profitable. I'm not going to sit here and tell you guys to tell your viewers stop using Bitcoin entirely, but
it's here to stay.
Yeah, it's here. It's definitely here to stay. But Solulab, they did there's an article you could read. It's about the top 10 green cryptocurrencies. kind of, you remember what we said when we started out? You were like, or why are people using it? It's because using paper currency, you're cutting down all the trees. And the original mission of cryptocurrencies was to kind of get away from that, use this digital currency because it'll have less like physical cost. So there are cryptocurrencies out there that are labeled green cryptocurrencies that kind of come back to that mission, kind of make that their whole thing. And a big one's Ethereum. It's probably the second biggest cryptocurrency out there. I won't get into it, but they use this thing called a proof of stake model, which is a little bit different, kind of like the proof of work, but it's a completely different. I haven't done much research into it.
Yeah.
And then there's also one called Solana. Solana's a good one if you want to look into it. And I urge all your